Hi everyone. If you compare Nifty 50 and Nifty Bank and look at the all-time returns, you will see that Nifty 50 has given almost 3 times return than the Nifty Bank. But in the last 1 year, Nifty Bank has given almost 11% more returns than Nifty 50. I can very safely say that in the last 1 year, Nifty Bank or the banking sector is in the bull run. And this is a perfect time for people like you and me to make huge money by investing or by selecting quality stocks in the banking sector. If you are an investor that would be happy with 15 to 30% returns with a reasonable risk, I think what you need to do is invest your money potentially in the large banks likes of State Bank of India that I covered in one of my last videos. But if you are one of those investors who would like to earn between 50 to 100% annual returns and are happy to take huge risks, then you need to consider investing your money in small cap banking stocks. And in this video, I'm going to discuss with you how to analyze small cap banking stocks and which are the top 5 small cap banking stocks that are going to give you good returns in the next 2 to 3 years. Also, experts are saying that banking sector in India is continuing to give good run in the next 2 to 3 years. It is absolutely the right time to invest in Indian banking sector. Every 1 minute you are going to learn something new throughout this video. The humble request, please watch this video without skipping. You are going to get maximum value out of this video. With that, let's get this video started. As you can see on my screen, there are more than 4,500 stocks listed on NSE. The first thing we need to do is find out quality small cap bank stocks because we are not interested in anything else. So for that, what we are going to do is we are going to put very simple filters. Let me show you one by one. First thing we are going to do is we are going to only select the banking sector. So I will go to sectors, look at the financials and select private banks as well as public banks because we are interested in both of them, and we are going to get 36 results. So there are total 36 banks, private plus public, listed on NSE, and we want to now find out the small cap quality stocks. For that, the second criteria we are going to use is market cap, right? So because we are interested in only small cap stocks, we are going to consider only those stocks that have got market capitalization of less than 10,000 crores, right? So for that, what I'm going to do is simply put this filter here and put 10,000 here. So we are going to get only those stocks that are small cap banking stocks. So this gives me 14 small cap banking stocks that are there for us to analyze now. The next thing what we need to do is find out of these 14 stocks which are quality stocks, right? We are only interested in quality stocks. For that, we are going to use very simple 3 ratios. Let me quickly show it to you. The first thing what we are going to do is add a filter called as margins, right? So we are going to look at last 5 years average net profit margin. So let us go ahead and add that. And also we are going to add net profit margin, which is the last recent financial year's net profit margin. Let's go ahead and add that. Now what I'll be very happy to consider only those small cap stocks that have given me at least 5% net profit margin in the last 5 years. So let us go ahead and put that filter here. So I'll be happy if any stock that has given me more than 5% average net profit margin in the last 5 years. Let's go ahead and enter that here. We get 10 stocks. Now if you have been watching my previous videos, generally I set my bar to at least 10 to 15% when it comes to net profit margin. You might have a natural question, Rahul, why are you considering only 5% net profit margin? Please understand we are talking about small cap banking stocks, and traditionally small cap banking stocks have been giving negative profits. In fact, they were generating losses and also they were only giving 1%, 2% net profit margin. Therefore, considering that, I'll be happy if any small cap bank that has given 5% net profit margins, I'm happy to consider it. If these banks were giving 10%, 20%, 30% of net profit margins, they would have by now become a mid cap banking stock or a large cap banking stock, right? So because of this reason, I'm happy for 5%, more than 5% of average net profit margin in the last 5 years. Let us now go ahead and look at the net profit margin. And this is for the last financial year. This is where I want at least those stocks that have given me more than 10% net profit margin. As I said in the beginning of this video, in the last 1 year, banking sector has given really good handsome returns in terms of the profitability. That is why the stock prices were rallying. So let us go ahead and put that filter here and select anything that is more than 10%. That gives us total 8 small cap banks that have been giving 10% net profit margin in the last 1 year, right? The last parameter that I want to use is return on capital employed. Let's go ahead and add that one as well here. So let us go ahead and select return on capital employed. Now return on capital employed makes a lot of sense in the banking sector. So therefore I'm using this here. Let us go ahead and add that here, and we are going to consider only those small cap banking stocks that have given me at least 10 ROCE. So I'm going to say more than 10 is what I need, and that gives us 5 small cap banking stocks that we are now considering for further analysis. Because we are not going to invest our money in these 5 banking stocks just yet, we need to put them through some rigorous banking sector analysis that I'm going to perform in front of you now. So far, if you're liking this video, hit the like button and follow me for upcoming videos. So for these 5 banks that you see on my screen, what I've done is I've gone ahead and consolidated their data in an Excel spreadsheet. It did take me 2 days of efforts, but believe me or not, it is totally worth it. Let me walk you through step by step. So what you see on my screen is all these 5 banks listed here, and the first ratio that we are going to learn about is CASA. CASA simply means is how much of current account plus the savings account, current account plus savings account divided by the total deposits the bank has. Higher the ratio, better it is, because if the bank has higher current account and savings account, it is paying very less interest to its customers. So current account, they generally pay 0% interest, and savings account, they might pay 2 to 3% depending on which bank we are talking about. But they are going to lend this money at 10% rate or 12% rate to the customers, right? Therefore, higher this ratio, better it is. If you look at this data, what you will see is that in March 19, we have considered 5 years of data. Their CASA ratio was in high 20s. But if we look at in March 23, in the last 5 years, each of the bank has made massive improvements in their CASA ratio, and you can see that it has come into 30s. If we compare this data with large banks such as ICICI Bank. So let me quickly show you ICICI Bank. If you look at the CASA ratio, it typically ranges between 45 to 48%. Of course, these are large banks, and people like you and me will put our money into savings account of ICICI, SBI or HDFC. But given that these are small banks, they have still managed to improve their CASA. All of them, majority of them improved their CASA, which is a great thing. And if we have to look at their CASA, I am happy that all the 5 banks have able to generate good CASA ratios in the last 5 years. Let us now move to the second ratio that we want to talk about, which is the cost to income. Cost to income is what is the cost for the company or the bank to generate income of 1 rupees. And now what you see here is that in the last 5 years, all of these banks have made massive improvements in their cost to income. It used to be around 50%, more than 50% in some of the cases, but they have brought it down to 40%. So look at CSB and Ujjivan, they have done massive improvements in the last 5 years, which is again a great indicator that all the 5 banks have been able to reduce their cost to income. This is the good health check that everybody needs to do around banking sector. Cost to income is very, very important. If you look at the next ratio, which is net interest margin, absolutely important ratio in the banking sector. Let us go ahead and have a look at that. So if you go to net interest margin, what we are likely to see is that in the last 5 years, all of these banks have made massive improvements, roughly 76% in the case of CSB and roughly 33% in the cases of Karnataka Bank. What is net interest margin? Let's understand that very, very quickly. It means how much of interest the bank has earned totally from its customers and how much interest the bank has paid to its depositors, and if you divide it by total asset, that gives you net interest margin. Now let us take an example. If let us say the bank has 100 rupees of total assets, out of that 100 rupees, if they have generated, let's say 20 rupees of interest from their customers, but have paid, let us say 6 rupees to its depositors, that means that total 14 rupees of interest margin is what the bank has been able to earn. So higher the ratio, better it is. In the cases of these banks, you can clearly see that they all are stacking very well. Ujjivan Bank stands out totally from here, and they have been able to generate massive net interest margin. But the problem with Ujjivan Bank, I can see here, is that in the last 5 years, they have not improved it at all. They're still where they were in March 2019. So there is a lot of scope for Ujjivan Bank to go ahead and improve this ratio as well. Let us also have a look at the net profit margin and how these banks have performed in the last 5 years. For that, what we are going to do is simply go ahead and select net profit margin from the list here. And you will see that in the last 5 years, CSB Bank and as well as Karnataka Bank has done amazingly well. In March 2019, when CSB Bank was making losses, now they have come back and actually their net profit margin is more than 23%. That is like 2000% improvements. Like in the case of Karnataka Bank, huge improvement. All around, if you see, all the 5 banks in the last 5 years have made massive improvements in their net profit margin. That is why these banks have rallied like anything last 1 to 2 years, because they have generated quality results in their P&L. We are also going to look at the earning per share. So let us go ahead and change this and also have a look at earning per share and how the earning per share have changed in the last 5 years. Again, if you look at this, CSB Bank as well as Karnataka Bank has made huge improvements in the EPS, almost 4,000% here, where their earning per share was in negative. All of them are having good earning per shares overall. So if you look at all these 5 banks, you will see that they have done massive improvements. Their net profit margins are good. Their net interest margins are really good. Their CASA ratios is very, very good. Their EPS is also good. Overall, these 5 banks have done phenomenally well in the last 5 years. Now comes $1,000,000 question, which is out of these 5 banks, which are the banks which are undervalued and which are the ones which are overvalued? For that, what we are going to do is simply have a look at the first of all Nifty Bank PE ratio, and the green line that you see is showing you how the Nifty Bank PE ratio is actually changing. Right now, it is roughly around 16. So in the last 1 year, it has been around 16 to 17 to 18. Right now, it is hovering at around 16. So anything that is less than 16 overall would be considered as undervalued. For that, let us go and have a look at each of these banks individually. So let us go ahead and first have a look at the Karnataka Bank. You will see that Karnataka Bank right now, the PE ratio is around 4.1 and the median PE ratio for this bank has been 4.6. Because the earning per share has gone up in the cases of Karnataka Bank, that is where it is undervalued right now. It is tracking lower than its median PE as well as overall from Nifty PE perspective. Let us go ahead and have a look at the CSB Bank. So if you look at the CSB Bank here, you will see that in the last 5 years, the PE ratio median has been 13.3, but now it has come down to around 8.6. This is again undervalued because EPS or earning per share has gone up, and you remember the formula: if the EPS goes up, the company becomes more valued, but the stock price is not increased from that proportion. Therefore, it is still undervalued. Have a look at the third bank, which is Ujjivan Bank. If you look at the Ujjivan Small Finance Bank, you will see in the last 5 years, the median PE was 13.6. Right now, it is at 6.7. Again, from my perspective, I can see that this is clearly undervalued. Have a look at Karur Vaishya Bank. Karur Vaishya Bank, if you look at it right now, the PE is trading at around 9.3, but the median PE is 11.1. Again, this is undervalued because the EPS for this stock has also gone up in the last 1 year. If you look at the last bank, which is Tamil Nadu Bank, and if you look at the PE ratio of Tamil Nadu Bank, you will see that the median is 7.1 and right now it is trading at 6.5. Again, it is slightly undervalued. Let us very quickly also have a look at the price appreciation in the last 1 year. So have a look at CSB Bank Limited. In the last 1 year, CSB Bank Limited has given almost 50% returns. If you look at the Karnataka Bank, it has given in the last 1 year 137% returns, absolute returns. If you look at Karur Vaishya Bank, you will see that in the last 1 year, it has given 185% returns. And if you look at the Ujjivan Small Finance Bank, in the last 1 year, it has given 147% return. If you look at the Tamil Nadu Bank, you will see that in the last 1 year, this is the only bank that has given 17% minus returns. And the primary reason for that is that they came up with their IPO in last year, September 2022. And you know how it happens in the cases of IPO. There is a lot of hype that is created. It was, of course, overvalued at the time. It has now corrected. So again, all these 5 stocks have given in the last 1 year close to 50% to 150% returns. I've done the analysis, fundamental analysis from a banking sector perspective, have looked at their CASA, have looked at their net interest margin percentage, have looked at their earning per share, net profit margin. From all the factors that I could think of, all these 5 banks are quality small cap banking stocks, and there is a lot of upside in the next 2 to 3 years in these 5 stocks. I hope you enjoyed this video. If you did, press the like button and follow me for upcoming videos. I will see you in my next video. Until then, keep rocking.